Hello, welcome to my channel. I created this channel solely to help you pass your ACCA exams very easily. So I'll be taking you on that journey, and this is my first video. So I will tell you a bit about myself before we go into the papers. My name is Dio. I'm a fellow of ACCA. I'm a chartered CFA holder as well. I have CPA and I also have CISO. Sure, you're wondering why so many qualifications. That's a story for another time. But however, you realize that I've written more than 50 papers to have all these qualifications. But there's something that is very consistent about it, which I will tell you right away. And that is the fact that I never had to write any of these papers twice. So I can guarantee you that I understand how to pass exams. And in my entire life, actually, I've never had to write any paper twice. So I'll be giving you the easy steps you can take to make your life very easy, such that you will never have a reason to write any paper twice. If you go with me on this journey, I promise you, without any doubt, that you will pass your exams in one sitting. So please enjoy my free lectures and always remember to like my videos as I start to post them, and also subscribe. Most importantly, turn on that notification button so you get to know when I post the new videos. I will start with financial management. So financial management paper will be our first paper on this channel. So if you are a student writing financial management in December, you're very lucky because you're going to have the first video available to you today. And you can start your journey that makes your life super easy. So with this video, I will cover the exam structure. I will look into the syllabus, and most importantly, the best part of this video is a summary of financial management in one equation. Here, I will break down the whole paper using one equation that you are very familiar with. And when you have that understanding, by the time we start going into the details of each section of the syllabus, your life will be super easy. So let's quickly look into the exam structure, the exam itself. As you probably know, it's going to be 100 marks, but these 100 marks will be divided into three sections. We have section A, section B, and section C. Section A would have 15 objective test questions, and each of them will have 2 marks. It's good you also note that these 15 objective questions will be independent of each other. But section B is slightly different. Section B will have 3 sets of scenarios, and each set will have 5 objective test questions. And these necessarily might not be independent of each other. So sometimes, if you cannot solve question 2, you might not be able to solve question 3 in this part. So it's important you are able to understand the scenario in each of the sets, and you're able to solve the questions, 5 questions that will follow each of them. Let me also mention to you that for both section A and section B, the questions might come from any part of the syllabus. Any part of the syllabus can be tested here. Now to section C. So remember, section A will have a total marks of 30 marks, because 2 marks each for 15 questions, you have 30 marks. And likewise, in section B, you have 2 marks for each question. So which means you have 10 marks for each set. So in total, you have 30 marks. Section C is 40 marks. And probably and arguably the most important part of your exams. In section C, you have 2 questions, much more detailed scenario questions. Yeah, it's a scenario based. And you can have maybe 2 or 3 or even 4 questions for each of these 2 questions. But usually you have to write your answer. So it's more of theory. And also for section C, only section C, section D, and section E of the syllabus will be tested under section C of your exams. So that's the summary of how 100 marks can be obtained in your exams. But please note that if you pay attention to my videos and you do and follow my tips, you don't have any reason not to have more than 70% in your exams very easily. My students have scored more than 80 consistently in this paper. I've had a student that had 86, 87. I've had a lot of them. And you won't be an exception once you follow my tips. Now let's look at the syllabus. This exam is meant to equip you with the skills that you will need as a finance manager. And you know the role of a finance manager. A finance manager is responsible for the finance function of a business. So your role as a finance manager is actually grouped into 3 decisions. The first decision is financing decision. Financing is the same thing as funding. You are looking for money. So this is about funding. When you find the fund, you need to be able to invest it properly. So you carry out investing decision. And after you have done your investment, I'm sure you are not investing just for charity. You are investing so that you can make more money on your investment. So you make more money. How do you spend the profit? Should you pay it as dividend or should you reinvest it back into the business? All of that is embedded into the third decision that is called the dividend policy. So you as a finance manager, your role is subsumed into these 3 major decisions. And how well you're able to perform with these 3 decisions determines how good you are as a finance manager. So these 3 decisions are now further broken down into all the sections of the syllabus. So the syllabus are 8 sections. Section A to Section H. Please pay attention to this. 8 sections, Section A to Section H. My videos will only focus on the sections you need to ace this paper very easily. I put emphasis on very easily. And these are sections C to Section G. So this is what I will focus on in my videos. So Section C, what is the content? Is on working capital management. Section D is on investment appraiser. Section E is on business finance. And Section F is on business valuation. And I'm going to link all of these together in one equation very soon. Like I told you, that will be the last part of this video, and I'm going there right now. The last part I will look at in this paper is the risk management. So which means I'm going to cover just 5 sections of the 8 in the syllabus. But guess what? These 5 sections is all you need to do excellently well in this paper. If you have time, I will also encourage you can read section A and B on your own, but there is nothing any difficult in A and B that you will struggle with. You can read it for your exams, yeah, but I will cover these 5 sections for you, and your life would never be the same after my videos. So I move on to the last part of the video, which I mentioned earlier, which is the most important part, and that is summarizing the whole of financial management in one equation. I'm sure you're wondering, what is this equation? Is it almighty formula? No, it's not almighty formula for the mathematicians. It's very simple formula that you've seen many times, but probably you must have been interpreting this formula in a different way. And look at this. This is the formula. What comes to your mind when you see this formula? I am sure if you are listening to me and watching this video, this is not the first time you are seeing this formula. But this is the formula that encompasses everything you'll be learning in this paper called financial management. I've asked a couple of my students, what do they think? And almost all of them have mentioned and said, this means total asset equals to liability plus total equity, which is the typical accounting equation. But they are not wrong, but unfortunately, that is for financial reporting speaking. So you look at statement of financial position and you say, is this statement of financial position balanced? So for it to balance, the total asset has to be total liability plus total equity. But let me shock you, that is not our interest for this paper, and this is not what I'm going to speak on with this formula. As a finance manager, when you see this formula, what this formula is saying to you as a finance manager is that A, that stands for asset, which you know, can only be financed either by using liability, which is third-party money, or by equity, which is your money. Or you can have a mix if you so desire. You can get some as a loan and use some from your pocket to buy the asset. This is the backbone of financial management. And now I'm going to link this formula to every part of the syllabus that I'll be looking at so that you will see that you have the whole of financial management easy already. This formula is the financial management almighty formula. Asset, definitely you agree with me, is a combination of current asset plus non-current asset. So this equals to current liability plus non-current liability, then plus the equity. So this portion is your liability portion, and the whole of this is your asset. The first section of the syllabus that we said we'll look at is section C. This section, working capital. What is working capital? Working capital is your current asset minus current liability. So invariably, what we are saying is that when we are looking at working capital, we'll focus on this part of the formula. Current liability and current assets. So that is what we'll focus on when we look at working capital. And what are we going to be doing? We're asking question. How much current asset should we have that is appropriate? And how much current liability should we have that will be appropriate? And what makes it appropriate or not? Remember, every company battles with the conflict between the profitability and liquidity. If you want to be very liquid, you need to keep a lot of current assets. But when you keep a lot of current assets, you don't have profit. Because the longer the duration of your asset, the more return you are likely going to get from it. But if you're going to keep all cash and you're not using and investing them, then your profitability will suffer. Likewise, if you want to be highly profitable, which means you want to just invest in long-term assets, you want to invest in non-current assets, then you know you're going to have a lot of profit for sure, a lot of profit, but you might suffer with liquidity, which is dangerous because that's impacting on your existence, and going concern might be a problem for you by the time the suppliers are calling for their funds and you're not able to pay. So that is what we'll be looking at when we look into details the working capital. How much of current asset is good and how much current liability is good. That is section C of the syllabus. I go to section D of the syllabus. Section D of the syllabus is looking at investment appraisal. This is your investment, your non-current assets. Here, we are not looking at current assets when we are looking at investment appraisal. We are looking at the long-term assets that are meant to generate returns for the business. So the question is, how do you make investment choice? Your objective is to generate return plus your capital. So you must be able to recoup your capital and at the same time make additional return. But remember, every investment comes with a cost. However, you need to ask yourself, which investment will pay me the highest return on my capital? And that is the investment of choice. So you need to be able to do appraisal of your choices. You will be faced with options and you will definitely be looking for the best option. So here we'll be looking at different methods that you can use to assess these investment choices that will come to you so that you're able to pick the best investment that aligns with the shareholder's aspiration. So under section D, we'll focus on this part. This part. Now let's move to the next one, section E. Section E is on business finance. And what is this talking about? Source of fund. Because in section D, we have seen different options of investment that are available. Now, section E is asking, where do we get money to finance those investment choices? We are only tied to two options anyway, remember? We said asset can only be financed either by using liability or by using equity. So this time around, we'll be asking, should we be using non-current liability, or we should be using equity, or we should be using both? But remember, whichever you decide to use, they are not free. They come with a cost. So you as a finance manager, when you are making that financing decision, business finance, you are making that financing decision here. You are looking most importantly at the cost of those funds. And what will be your preference? Your preference will be the cheapest fund or the cheapest combination of fund. So therefore, you must learn how to calculate cost of fund. And that is why when you look at this part of the syllabus, the biggest part of this part, in fact, almost like the only thing you'll be learning so ever in this part is how to calculate cost of capital. And you already know that capital can either be equity or debt. So you will learn how to calculate cost of equity, you will learn how to calculate cost of debt. And remember, I said you can also decide to use both equity and debt. And when you decide to use both, you have a cost of capital that is called WACC. So you will learn how to calculate all of this in details by the time I go into the details of the syllabus. So that is how you decide on which source of fund you will use. You want to go for the cheapest combination of funds. And that is about section E. Now, let's go to section F. Section F of the syllabus look at the business valuation. When you identify the options in your investment appraiser, you've seen all sort of options of investment vehicles available for you to invest in, to purchase. But the question you need to ask yourself here is, how much should you be paying for this investment? How much is good? How much is appropriate? How much is the best? You need to know, because knowing the value of asset helps you to maximize your return. Take for instance, you can pay $100 for an asset and the asset yield $120. I mean, looking at this, doesn't it look good? It looks good because you're practically going to be pocketing a profit of about $20 and you should be happy. But the question now is this the best you should be making? Because this asset that we're talking about might actually be worth just $70. Which means if you are done your business valuation and you know you shouldn't pay more than $70, you will still make your $120 and your profit will have been $50. So it's so important to carry out valuation of this business so that this non-current asset that we're talking about here is not just overstated or overbloated. So the business valuation gives you the right value of your non-current asset. So the business valuation helps you to get the best value from the asset. These sections will definitely now show you different methods So what we will learn here is methods of valuing assets. Different methods. That is going to be our focus for section F. And lastly, the last section I will look into is section G, which is on risk management. This last core of the syllabus impacts the whole formula, both the asset, both the liability, and both the equity, and also the equity. Right. So look at it this way. Everything we have discussed from section C to section F is all like a plan, like an anticipation, what we feel will happen, what we think we should be paying, the cash flow we can make. But remember, plan is not always going to be your actual. Therefore, you will be faced with what we call risk and uncertainty. So therefore, this risk must be managed. We need to manage the risks such that your plan is not too far away from your actual. And with that, we're able to predict more accurately and even we're able to plan better. So here you will learn what I call hedging techniques. Hedging means reducing risk. So hedging techniques are techniques you use to reduce or manage your risk. Yeah, so you use them to manage or minimize your risk. So here we'll learn about hedging techniques. So that's the summary of the whole syllabus, and I will be looking at it in my subsequent videos. So going forward, I will take each section and explain in details. I will solve questions, and if you have any personal questions or something you want to clarify, you can put in the comment. You can reach out to me in the email. The email is tutor dot acca at gmail.com. You can reach out to me in the email. You can put your comment, and please, if you love this, click the like button, put your comment, and most importantly, please remember to subscribe to this channel. Thank you. We'll see you again in the next video. Bye for now.